And welcome in today's Trade Idea section inside of Blockrevision channel. Now, this is a series dedicated to finding the most interesting stocks and cryptos and other assets that we can make a trade on regarding fundamental and technical analysis as of right now. So let's get into today's episode. And today's very interesting stock that I'd like to present you is Tattooed Chef. So Tattooed Chef is a plant-based food company that went public through a SPAC, that is a special purpose acquisition company, in 2020. And right now brand is tapping into growing healthy eating and plant-based food trends. So let's get into some fundamentals of Tattooed Chef and let's find out why this stock might be interesting for traders and investors. Right now let's get into fundamentals of a company. We can find that Tattooed Chef is a company that strengthened their cash to debt position. So it means that financial strength really looking very nice. We can find that Piotrowski Altman scores at a very safe level, so we can find that the company is in a quite stable position. However, profitability, it's something that is lagging behind what financial strength is showing to us. So regarding what was in the past, this Tattooed Chef company is right now struggling with making profits, and that's something that we may find also during recent periods. In the first and second quarter we have struggled to meet the terms of earnings, and we have underperformed quite strongly. Despite its skyrocketing sales and its relative freedom from the expense of a significant advertising budget, Tattooed Chef is still really registering a net loss inside of those periods. Looking, however, at valuation rank, we can find that in many of the ratings this stock is lagging behind competitors such as Nestle, Conagra Brands, and even Beyond Meat in some cases. So the one thing, or even like two things that are getting better is EV, so it's enterprise value to revenue, that is important, and also PS ratio getting better, and looking at the past is showing that the indicators are strengthening. However, still need to catch up what the other brands are doing. So Tattooed Chef is definitely a growth stock with some promises for delivering what they claim in the months and years to come. So regarding the most important aspects of a growth, we may find that revenue and gross profit right now, after this very dynamic fourth quarter of 2020, is lagging after showing us that the trend might be disrupted when we just have jumped to such a high levels in revenue and gross profit. Right now we are disappointing investors, so it's something that may bother many of them. Right now let's get to PE ratio that is right now at 96 points, and versus the whole sector we could find that valuation might be a little bit too high, but it's just the PE ratio. Let's get into another one. PEG ratio is hasn't been registered yet, as it's still a new stock. So in order to verify earnings per share is unfortunately also decreasing after this very good performing time in the fourth quarter of 2020, and right now is lagging behind. However, price to free cash flow hasn't been noted here, but free cash flow is a little bit rebounding from this time where the company shown a negative tendency in the second half of 2020. So it's something that is a little bit more optimistic than it was before. So it's a positive check mark. Another one, shares outstanding are increasing, so it means that we are not planning any buybacks in the time to come. However, the amount of shares outstanding is slowing down for an advantage of investors. Right now, let's get to other data and have a look at the future. We can find that earnings per share for next year is at 87% in comparison to this year 900%. So it means that growth will slow down a bit, and the sales quarter over quarter means that the stock is still looking for some chances in order to make a growth in sales. So it's optimistic for shareholders, and we can find that it's a very optimistic outlook as of here. Something that maybe a potentially unpredictable in consequences is this short float at the level of 34%. Under ordinary market conditions, this would be a negative thing, indicating a large cohort of short sellers have done the due diligence and found the company's fundamentals to be significantly lacking. However, a few years ago, this beefy short interest would have been definitive warning sign about the company's future, but right now may point that the stock is prone to have its short squeeze to the upside and possibly a very strong rebound from such levels as we are moving at right now. Regarding analyst rating consensus, we can find that one Wall Street analyst has appointed that TTCF should be traded at $18 in a year from now. However, it's just one prediction, so we shouldn't really bother this one. Regarding what this stock is presenting and what we can expect in the future, Tattooed Chef is one of the company that is right now looking for another sources of income, and recently have acquired Belmont Confections, the transaction that will allow Tattooed Chef to further diversify its product offerings and enter into the $10 billion global plant-based bar category that we really hope for. So regarding all of these things, we can right now have a point at what technical analysts are saying to us. So recently we've just gone through fundamentals that told us quite quickly that the stock is right now in a trouble in terms of possibility of making better income in the future. Recent earnings disappointments showing us that we are right now struggling in terms of meeting expectations for this stock, and we can find that that's something that may bother lots of shareholders. However, in terms of earnings per share and also quarter revenue growth, we can find that the stock still has a lot expectations for the future, and also is very popular. It's very popular among young investors that are hoping that the company will overperform other competitors in the months to come. Right now, the stock has improved its cash to debt ratio that may help its further progress in the future. In terms of technicals, we can find that we have formed a symmetric triangle that is bullish continuation pattern. On a weekly chart, we can find on our side that we are just flattening the curve that may also show us that the bulls are getting back to the stock. Let's have a look at the lower boundary that may show us that TTCF may find a bottom right around this area of 15 to 17 bucks. So it's something we need to have a look at. In terms of a shorter time horizon, we can find that on ATR that's showing us the volatility of a stock, we are at the historically lowest levels. So it means we are just counting on a possible strong rebound. Every single time where the stock has been as stable as it's right now, the future moves have seemed to be quite abrupt, and that's something we might expect as of this time as well. So inside of such formed symmetrical triangle, we in a technical analysis expect the price to move interchangeably from lower band to an upper band alternately. So in terms of such a short time horizon, within 2 or 3 weeks we expect the price to rebound to somewhere as these price levels and hang on here for a while. So right now it's very interesting to watch TTCF, whether it will revert its tendency and that has been maintained since the end of since the beginning of September, and right now will possibly get through this recent resistance of 18.2 bucks. If it will happen, we will definitely get back to lower to the upper band and make quite positive outcome for all of the traders that caught this dip of October. So right now, if I'd like to put a trading board right here, this would be something that would look like this one. With a target of 21.5 and with a stop loss at 16.6. In terms of area of an entrance, I would find the possibly very good area of an entrance right off those limits. Those limits just have been limited by 17.2 and 18.5. If the price will get over any of those limits, I wouldn't find this proposition of a trade as valid. So right now it's quite beneficiary trade if it will work out, and the possibly 20% target is something that may enjoy even the most fuzzy trader. And that's it in today's episode. Remember about risk management and about putting a stop losses or at least alarms regarding the areas that may be significant to you. So thank you very much for watching and see you in the next episode. And if you enjoyed, just hit a thumbs up button and subscribe to the channel if you find the content interesting. See you!